Hello, everyone, and welcome to our session on empowering women to reach their financial goals. We're thrilled to have you here with us today. My name is Olivia Higgins from Mumu, Singapore, and I'll be moderating our discussion with two incredible guests today. Laurie Itkin, aka the Options Lady, a highly respected financial advisor, author, and advocate for women in investing, and my colleague, of course, Jessica Amir, market strategist at Mumu Australia. Hello and welcome you both.
Good to be here.
Hi.
Hi, I'm really excited for today's session. Now, today's session is all about inspiring women of all ages to achieve financial independence and empowerment through trading. Now, we'll be sharing personal stories, breaking down myths, and hearing practical approaches to start or advance your journey. Now, I'd first like to chat with you, Laurie. Now, let's unpack this a bit. Laurie, can you tell us about your journey into trading and what led you to choose options as your specialty? And what is the path like so far?
So when I started trading, I made my first stock trade in 1993. I was 24 years old. I chose Starbucks as my first stock. Everyone always asks me, do I still hold Starbucks? No, I've bought and sold it how many times, I don't know. But back then, in the old days, there was no internet trading. You had to
Mhm,
call on the phone and push button, and they charged you
mhm,
30 bucks a trade. And the only
mhm,
way you could find out what the stock price was is the newspaper, the Wall Street Journal. I mean, for us regular investors, we didn't have terminals. So options was far away, in my path. And I think what I really started embracing options, I had been trading stocks for years, just years. And I went
mhm,
to a informational session that was put on by my online broker at the time, no longer exists, it's been acquired, but they would put on seminars for people. And I went to a seminar and the gentleman started talking about covered calls.
mhm,
And the light bulb went off for me because when you buy a stock, if it does not pay a dividend, you only make money if you sell the stock at a price higher than when you bought it. If you buy a stock that pays a quarterly dividend, you have two sources of potential profit, a capital appreciation and the dividend. But the option premium, when you sell a covered call, you own the stock and you are getting paid immediately in your account today to agree to sell that stock at a higher price in the future. And
mhm.
since I would always sell stocks once they had reached a price target, why not get paid to do it? And that, Olivia, is when I became a huge advocate of options and the power and the flexibility and control they give you.
Mhm. Thank you for that. I mean, that's really powerful, Laurie, and really inspiring as well. But could you just tell us a bit more about the moment when you realized that options trading was something you could excel at, despite it being, perhaps intimidating as an area for many investors out there, especially the new ones?
Sure. It does add a layer of complexity because trading stocks is difficult enough. You have so many things to think about. But I think in this day and age, there is so many resources available. You can watch videos of other people placing trades. You can be in groups. You can have supportive networks. If you want to learn by YouTube, what have you. But I will say that, and we'll get into our conversation
Mhm,
about this, but a lot of women that I work with feel they have to be perfect. They're afraid to take that first trade. They're afraid to lose money. Well, let me tell you, if you don't lose money some of the time, you are not properly investing, because investing, you are going to make money sometimes, you're going to lose money sometimes, and you have to be ready to just jump in that pool. And don't worry, you will make mistakes, but you will learn from those mistakes. Sure, I did. I think we all did.
mhm. Always learning from mistakes and really not looking at perfectionism to start, right? I think that's really important. Now, from your experience, then, what are some of the biggest barriers or challenges that women face when starting in options trading? And what advice would you give to them so that they can overcome these potential challenges?
Well, one of the tools out there that I think is great for people to practice with is take advantage of paper trading, where you can set up the trades and
Mhm.
it's not real money. Almost like if you played poker, maybe you do some free online poker before you actually show up at the poker table. So that's one of the things that I think gives comfort. But again, knowing that it's okay to make a mistake and start, I think one of the things that always gave me confidence was knowing that just start with a little bit of money, maybe diversify, put a few different trades on, and know that you're not putting all your eggs in one basket, because diversification has been around for a long time because it works.
Mhm. Thanks for that. Now, what are some of the most significant lessons you've learned so far? So, one of that is really, sharing with us what you learned early in your options trading career, and how did it shape your approach going forward?
Well, once you start learning about a strategy or two, you learn that there's so many option strategies that you can take advantage of. So once I felt comfortable with covered calls, I started doing my other favorite strategy, which is selling cash secured puts. And for people who aren't familiar with that strategy, let me give an example. Let's say you go to your department store in town that always has sales. Like every month there's a sale, and maybe you are out there and you see a pair of black pumps you like, black high heels, but you have 5 pairs of black high heels in your closet, so you don't really need them, right? You
Yeah,
never
that's
get
my problem.
emotionally attached. It's a problem,
Yes.
but you never get emotionally attached to your stock or your ETF. And
Mm,
so if Macy's or your department store, whatever you have, Neiman Marcus, whatever the department store is, gives you a coupon to come back later and buy those shoes on sale, you would do it, right? That's what selling a
mhm,
cash secured put option is. So I think one of the tips to help women feel more comfortable is that those two strategies I mentioned, writing covered calls, selling cash secured puts, are
mhm,
less risky than just buying shares of stock or an ETF. Believe it or not, those two strategies, option strategies, are less risky than the basic stock trading. And once you can know that options give you more control, how can you not love them?
mhm. Thank you for that. Now, the next question then, Laurie, I mean, in the community, you're prominently known as the options lady. So, what is a common piece of feedback you commonly receive when you suggest options trading to clients out there?
Look, not everybody is going to be a self-directed trader at all times in their life. People get busy. People are focusing on other things. So, I'm a professional money manager and I do those two strategies as part of overall wealth management for clients. But I've had clients that have learned from having their money managed, and then they decide they're confident enough to manage their own accounts themselves, which is great, right? This is terrific. You can work with a professional because a professional costs money and then venture out on your own. I've also had clients in the reverse, people that have managed their own portfolios, but maybe they're in a challenging career or they have 3 kids now or what have
Mhm,
you, or they're, options trading, it's sort of hard to do if you're not available during market hours, you're limited.
mhm.
So I just want to send the message that it's great if you want to do this yourself. It's great if you want to pay someone to do it. And it's great if you go in and out of those combinations, whatever fits your lifestyle at the time.
Mhm. Great stuff, Laurie. Now, we started off with your journey. We talked about what new investors could look at, the biggest barriers for women in general, significant lessons, and also the feedback that you receive commonly from clients. Now, my last question for you before I transition to Jessica shortly, what are some of the most common strategies you use when trading options? We get this question a lot, especially from our audience tuning in. Now, can you tell us a little bit more about these strategies?
Yeah. So the two strategies that I do for clients are the covered calls and the cash secured puts. They're terrific. They manage risk, but there's one downside. They're capital intensive. You need a fairly large account to start, whereas other option strategies, you need very little to start. There are some of the challenges and issues that I would encourage people to think about is that some of the option strategies are successful if you're betting on a direction. There's directional risk. I would say for newbies, don't start with directional risk because you'll be wrong half the time. So, or more. So, you have to ask yourself, what are your goals? Are your goals to manage risk and not try to beat the market? Or is your goal, I have a budget here, I'm going to be speculative? And both are fine. Just always check in with yourself. What are your goals?
Now, I'm interested to hear from Australia's market strategist, Jessica Amir, and delve into more of the fundamental questions around building wealth and making smart investment choices. Now, Jess, from understanding sector movements to offering guidance for those just beginning their wealth building journey, we'd love to hear from you on your insights on navigating today's global markets and making strategic decisions that align with long-term financial goals. Now, my first question for you, Jessica, what is the best way to understand sector movements and opportunities?
Thanks for having me. It's a great question. I think there's lots of ways to approach this, Olivia, but the best way to think about this is to take a Peter Lynch approach. And what I mean by that is Peter Lynch, a billionaire hedge fund investor, a great legendary investor, speaks about becoming observational. And that means noticing trends that are occurring around you. Just last earnings season in the US, we heard the Magnificent Seven companies say that they're going to spend some $200 billion on AI this year alone. So it's just outstanding. So then that might, for an investor taking that observational approach, this might be like an aha moment and look at some key benefactors. Who are the companies in that sector that are gaining quality clients? And then from there, then I'd come up with a list of clients. I might use Moomoo to go and have a look at our screener, or I might use many of the other filters on Moomoo's app. And then I might have a better understanding of all the different type of tech companies in the AI space. And then the second thing, just rounding it all out, is I guess for new investors noticing sectors as well, is also remembering to sustain the sector's higher levels, you need to see earnings growth. And next week, we'll get NVIDIA's earnings. That'll be a really good validation for potential sustained higher levels in a stock that you've picked or a sector. So you want to look for growing earnings to kind of validate that the trend can continue.
Mhm. Thank you, Jess, for that. Now, the next question, we've got all types of investors, all types of ages, and people tuning in right now from the audience. Now, what is the best advice you can give to, let's say, a 24-year-old woman trying to build their wealth?
It's a great question. So I'd say for a 24-year-old or for any new investor, there's probably three things to note. We don't have to complicate it when we are starting our investing journey. So the first thing would be to invest as early as you can, as often as you can, and as much as you can. And on this point, I'd also consider dollar cost averaging. So setting up a recurring investment to take some of my pay out per month and to put it into my Moomoo account. The second thing, Olivia, that I'd recommend is to take heed of what Warren Buffett says. And he says to be greedy when others are fearful, and fearful when others are greedy. So this year, we've seen the S&P 500 pull back a couple times. But so it's really important for younger investors to kind of take heed of that. And then you might buy into that weakness when other people are kind of panicking. And then you'll find that you'll be rewarded on the upside because remember, like we were saying earlier, earnings growth is key for growth of a share price. Third thing is using seasonality. So markets move in cycles. So we all know September is traditionally one of the worst periods for the stock market. So the stock market usually pulls back in the US and then starts to recover because investors have kind of repositioned their portfolios. They've got a really good indication of what's happened for the year, what might happen ahead.
Mhm.
So they readjust their portfolios in September and they start putting money back into the equity market in October. And then November is traditionally the best month of the year for the US. So then we see typically the best rally in November. So you might want to take advantage of buying into weakness in September as an example.
And
Mhm.
I have some tips for a 24-year-old woman living in
Course,
the
Laurie.
US. Our policies in the US, we give you great opportunities to save and invest. You know, if you're employed by a company, you may have a 401k, a 403b, where you're just going to get automatic paycheck deductions. We have something called a Roth IRA, which is great because you never have to pay taxes on that money again in old age when you pull it out. And also your principal is available if you need it. Because when you're 24, who knows what's going to happen? You may need a down payment for a house 5 years from now. You may want to go to grad school. Who knows what you're going to need? But I think for young versus old, the advice is very similar. It's called a bucket strategy. Any money you're going to need in the next 2 years or so, that you know you're going to need to spend on something. You may not know what it is, but you're going to. You really should keep that in liquid assets that are low risk, that pay interest, treasury bills, CDs, money market funds. But if you're 24, there's going to be some money that you can put away every month that should be for the long term. And that's what the stock market is, because, you know, I took a class from Wharton professor Jeremy Siegel way back when, and he has a book called Stocks for the Long Run. And yes, I firmly believe, I always argue with my friends who invest in real estate. Yeah, real estate's great. You get a lot of tax benefits, but I'll take stocks over real estate anytime because I can make a trade with my
Mhm.
fingers on the keyboard and I don't have to pay a broker's commission. I don't, you know, it's just stocks for the long run for your long-term money. But again, any money, there's no quick buck here. And if there's money that you're going to need to pay rent with 2 years from now, don't be in the stock market.
Mhm. Now, the key word you brought up there, Laurie, was long term, right? So, and the next question, what sectors of the market should we look for long term investments to build generational wealth? Jess?
I've been advocating and speaking to clients and also sharing with media, I guess, three hot sectors that I think are going to continue to garner a lot of institutional flows, and also that'll likely result in continued retail buying as well. So the first one is AI. So we do know that the AI sector is growing at a compound annual growth rate of 42% per year, and that's expected to continue for the next 10 years. And there's a good reason for that. We've got the biggest tech companies in the world, the innovators. These companies are revolutionizing the way that we live and work, but they're thinking about the future. We've got companies like Nvidia, Tesla, that are really, speaking about driverless cars. They're not just thinking about it; they're executing. Um, so that is expected to the AI industry in totality is expected to see $1.3 trillion in company spending. And so when you're seeing this type of investment, you can't ignore it. So AI, number one. Secondly, uranium companies. So with all this AI and tech investment, particularly by these magnificent seven companies in the US, we have a real need to keep the lights on 24/7 to power these data centers. And so we also have NATO and the EIA, these international bodies advocating in line with the Paris Climate Accord that we need to strive for carbon neutrality. And so uranium companies, there's a good reason that they're continuing to grow. And so uranium companies like Vistra, Constellation Energy, that's the biggest supplier of uranium energy to the US grid. These stocks are up over 100%. Vistra is up by 270%, so they're up by more than Nvidia. So you really have to pay attention to uranium companies that are continuing to gain a lot of attention. And then third one, just really quickly, is defense. So if it's good enough for an economy to spend 2% of their annual income on defense, then you've got to ask yourself, why aren't you considering an investment in defense? If you're not into looking at aerospace companies, those type of things, it really would be really worthwhile to consider cybersecurity companies that are gaining a lot of notoriety, not just because of Trump's election, but defense cybersecurity companies, they garner 2% on average of a company's spending each year. And that's why companies like Howard Aerospace are up
Mhm.
109% this year. There's many other companies that you can look at. Lockheed Martin, that serves Australia and the US. They're the US biggest defense contractor. So really worthwhile paying attention to those three themes.
I think it's prudent to look at the point is that sectors that are going to change over the long run, right? So energy may be hot, then it's not hot, and look at everybody was crazy about the solar ETFs, and now they're in the doghouse. So what's so great is options are available on a lot of the most popular exchange traded funds, ETFs. And it's so easy now to put your portfolio maybe a little bit in emerging markets, a little bit in value dividend paying US stocks, the growth stocks that Jessica talked about. You can't ignore those. I mean, the NASDAQ stocks, you just can't ignore them. But there's also the Warren Buffett type stocks, the dividend payers. There's something called dividend aristocrats. Through thick and thin, through the 2008 financial crisis, there were a number of companies that not only consistently paid their quarterly dividends, but raised their dividends. And you will never know which sectors are going to outperform or underperform in any particular year. So that's why be mindful, as Jessica says, of the trends, but you also want some overall diversification too to balance things out. However, diversification means that you're not going to outperform any index because you're diversified. So you need to have realistic expectations. If you're going to be diversified in different sectors, don't expect a huge outperformance of what the market is doing. And I'll take that all day long.
Thank you, Laurie, for your insights on that. Now, Jess, I asked this question to Laurie before, but what is your advice and your insights on the best investing strategy for the beginner investor?
Well, I think advice for the beginner investor or 24-year-old, it might be a similar thing. So start early, invest often, dollar cost average. As Laura and I were saying, I think it's really worthwhile setting up a recurring investment. That means, getting some of your pay funneled into your trading or investing account. This is becoming really popular, I guess, with the trading and investing community globally. Secondly, take the Warren Buffett approach. Be greedy when others are fearful when others are greedy. There's a lot to be said about paying attention to the VIX. You can
Mhm.
track that on Mumu's app. When you see the VIX spike up at 20, you probably, which is like an above average high reading. When you typically see the VIX get to this level, you'll see the S&P 500 pull back. And this might be an opportunity for you to start to, think about buying into the dip. And then the third thing is just to remember that markets have cycles. Um,
Mhm.
do look to buy into those down months, as either if you're accumulating a long-term position or you're buying into the index for a swing trade or investment. And I think something that maybe Laurie has touched on as well, and what I will say is to not be greedy. Sometimes we can let a trade run up and we've made 100% on the stock, or we've even made 20% on the stock. Set your target for what you want to get out and walk away from a stock in. What is that? What is that percentage that you are prepared to walk away from the table? Because this is a very normal part of risk management. It's a very normal part of um, any prudent strategy to protect your wealth and kind of, you know, keep money for a rainy day. So you want to kind of take your profits, lock them in, and then get ready to buy on another pullback or look for opportunities. There's always a bull market, but yeah. So just do think about adopting your own strategy.
And don't be
Mhm.
afraid to take a loss and realize a loss. In the US, if you're trading at a brokerage account, you can use that loss to offset some of your gains. So,
Mhm.
again, I want people to understand that you will have losses on certain positions. That's
Mhm.
normal. And if you said to me you never had losses, you're lying. You're lying. There's no way. Maybe your first trade you didn't have a loss, but all of us who've been doing this for years, there will be losses and you can't be afraid of it. Now, I will also add is that I decided from my first stock trade, similar to what Jessica does, is that I would make investing part of my budget.
Mhm.
Anytime I had $500, this was way back when, the early 90s, anytime I had $5,000 accrued in my checking account, once I went over 5,000, it would go into my stock account. It would go on my stock account. It was part of my monthly budget. Just like I'm going to buy a Starbucks coffee, I am going to every month be investing. And this is why at age 56, I could retire tomorrow if I wanted, because I started young. And you start small, don't laugh. It's like people say, well, all I can afford is this amount. No
Mhm.
problem. Start small. The key is through compounding to consistently do it.
Mhm. And to start at the end of the day, right? Yes, thank you for that. Now, there's a lot, often a lot of misinformation online, wherever we go, right? Whatever platforms we're on, about women in investing. Now, what are some common myths that we can look at, and some that you have both encountered on your journeys, and why do you think these misconceptions persist? Now, Laurie, for yourself, what kind of feedback as well do you receive from your clients on this, on the top challenges that they face? And we covered this previously as well, how they overcame that. But I think I do want to unpack a little bit more on demystifying some of these.
Yeah, women feel they have to be perfect, men
Mhm.
jump in. That's a big generalization, but I think it applies. And there are so many reasons why women say they're not ready. I don't have enough money to invest. That's a myth because at a minimum,
Mhm.
if you have a workplace retirement account, they don't even care if you do, $50 a month or $20 a month. You can always invest. Um,
Mhm.
I don't understand math. Really, you only need basic math. I mean, trading is not rocket science,
Mhm.
it's a new language. Just as I
Mhm.
had to learn French in school, I wasn't good right away. I'm still not good, but
Mhm.
so again, the myths, and then the myths, there's this myth that women, sometimes you see these reports that women are actually better traders than men. Whatever. I mean, it could be that women, there are plenty of risk-taking women. There are plenty of risk management women. I don't really go by those genders, but I will tell you this. The trends that are really not a myth is that women are going to be the ones with all the money at least in the US and potentially the world, because women are the ones that are growing the wealth and are going to have control of the wealth. So we better understand what we're doing because money's not everything. But I'll tell you, when you have money, it makes life easier, doesn't it?
Mhm.
So you better learn. You're going to be inheriting money. You may outlive a spouse. You may be earning money. You may be a power earner right now. If you're going to earn money, you have a responsibility to learn how to invest that money.
Mhm. Mhm. Really powerful. Thank you, Laurie. Jess, what are your thoughts?
I love what Laurie said. I absolutely agree. So sure, the stats are saying that women have got less capital, they're more cautious, they take a longer term approach. What's really interesting to me is a couple of other things. We're seeing a huge uptick in female investors in Australia, but it's happening globally as well. Um, and in Australia in particular, we saw a massive flood of new investors come into the market after COVID-19. So Australia saw the second most amount of new time investors coming to the market behind the US.
Thank you, Jess and Laurie, for that. Now, to the audience members tuning in, thank you again for being here with us. We are grateful to have you here, and we really value the community. So, if you have any comments or any insights that you'd like to share, any concerns, do type it down in the comments section. Now, for the last question, looking to the future, I love this so much. Now, what do you think? Is the role of women in investing? I know you already started it, Laurie, for this great question, but I think let's take a forward-thinking approach on what we can look forward to, and what makes you excited about the future for women in investing.
Well,
Laurie?
I spend, part of one of my specialties is divorce financial planning, working with
Mm-hmm.
men and women through the divorce process, mostly women seek me out. And you have to think about it because women live longer than men.
Mm-hmm.
There are statistics out there that say that it is very likely, I don't have the exact percentage, but it is very, very likely that whoever you are, will be a woman 100% responsible for managing her money. Whether you made it yourself, whether you were married to somebody who made it, whether you inherit it, but you're going to be a single woman living in a household because of your lifespan. And what everyone is scared about is running out of money. You can't work till you're 95. I mean, maybe if you're a psychiatrist and you're sitting in a chair, but most people can't work till they're 95. So their investment portfolio is going to have to pay them monthly income. And the sooner you learn about that, the better off and more successful you are going to be. Too many women reach out to me during or after divorce with no concept of what any of this stuff means, and they are going to be managing wealth. And they are terrified they will run out of money. They will outlive their money. So I think it's important that I teach people how to generate monthly income you'll need. You can choose a variety of investing techniques, overwhelming, but you learn, and understanding what it costs you to live and breathe on this earth. Most people have no clue what their monthly budget is, what it costs them to just take up space in this world. And if you don't have investment income that exceeds what you spend, you're going to be in a lot of trouble once you're retired.
Mm-hmm.
So I'm excited in having more women, instead of being scared to death about this, taking action to improve their position and be successful. That's what I'm excited about.
Mm-hmm. Really inspiring, Laurie, especially those groups of women that you help as well. And those listening right now, we'd love to know your thoughts on this. Thank you, Laurie, for sharing that. Now, Jessica, what about for yourself? I mean, what are you excited for as we go into the future for the role of women in investing? But in particular, we're looking at the uncertainty of the global events so far, and also what unfolded last week. And I think I do want to unpack a little bit on your approach to options trading, and what advice also do you give to our own Mumu users listening to help them adapt to these times?
It's a great question. Maybe three parts, but I'll answer it pretty quick, just in light of time. So, on the back of Trump being elected, markets are elated. We've got Bitcoin breathing down the neck of 90,000 US dollars for the first time. Options in the Bitcoin market are on for the cryptocurrency king to rise over $100,000. Standard Chartered Bank in China says it'll hit 125,000. We heard the VanEck CEO saying it's going to hit 300,000. Regardless, whether if you're a man or a woman, I think it'd be remiss if you ignore the words of the BlackRock CEO, BlackRock, the world's biggest fund manager in the world, saying that Bitcoin will have its place in the US strategic reserves and sit alongside gold. So for female investors, I guess, who are taking heed of this taking a heed of this messaging, but all investors should be taking note of this and thinking about some positioning in Bitcoin. So I'm excited that it could potentially hit $300,000 next year, and that could potentially change some people's lives. Um, so the good thing is with Mumu, you can buy IBIT, with $5. IBIT's the world's biggest um, cryptocurrency ETF. And a lot of institutions are putting some capital towards this. They're putting clients' capital towards this. And so this is probably going to play a big part of institutions' portfolios in 2025. So, yeah, my second piece of advice with an option strategy is use paper trading, as Laurie was suggesting,
Mhm.
experiment, ask our team who are available 24/7, ask them questions, but get to know the tools, paper trade
Mhm.
until you build up confidence, and and invest as often as you can. If you don't know what to invest in, at least consider a position in the Nasdaq 100, the QQQ, one of the most popular ETFs in the world. If you're investing in that down under, that might be the NDQ, and consider putting 10% of your salary, if you can, towards your financial future each pay. So typically, taking the 70/20/10 approach, you live on 70% of your salary, 20% might be for the long term or paying down your mortgage, and then
Mhm.
10% is for your investing and saving, but for your future. But yeah, ultimately, just consider investing in you and as often as you can.
Mhm. Laurie and Jess, we're grateful to have had this time with you today. And we hope that our audience members, that you feel inspired and empowered now to explore options trading and also take the advice of what Laurie and Jess covered today. Now, as we wrap up, we'd like to take a question or two from our Mumu audience members. Now, the first question, I'm just going to open it to the floor. I can be very emotional. How do you handle emotions like fear and greed in trading?
Never get emotionally attached to any specific stock. It's a stock. And once you are not emotional, you can use your brain and reason.
I absolutely agree. Write your trades, write your investments down in Excel.
Hmm.
And how don't you take it emotional? How you don't you get emotionally involved is just by looking at the numbers. So
Hmm.
don't fall in love with the company, fall in love with keeping your money. And that means when you reach your profit target, maybe become really scrupulous, take your
Hmm.
profits off the table. If a trade moves against you, investment has changed, the sector's changed, the stock's changed. It's okay, as Laurie said, to cut your losses. There will be other opportunities. There's
Hmm.
always a bull market somewhere.
I love that. Don't fall in love with the company, but fall in love with your money. Great stuff, Jess. Now, next question I'm going to take from an audience member. And Laurie, you said just start, right? No matter how small you want to start. What are some ways to grow wealth with perhaps $100 in monthly investment?
Well, first, make sure you've paid off any credit card debt because you never want to invest when you are paying huge rates of interest to somebody else. So take care of that first. And then,
Mhm.
it's not like the old days. Now you can invest with small amounts of money. And as Jessica has said as well, just make it a habit, make it a monthly habit, no matter how small. And maybe next year, challenge yourself. If you get a little raise at work or you excel in your career, you allocate a little more to that, and you will be shocked. The power of compounding. You will be shocked how 20 and 30 years in, you're not going to believe your wealth.
I love that. Yes, really exciting. I mean, for those listening again, to start and really look at empowering and educating yourselves as soon as you can. Last question from an audience member. How do you plan for 2025?
All right, well, I'll take it. It doesn't matter who's in office. We show in the US stock markets, it doesn't matter who's in power. We have Congress, the Senate, the House. It's really, that should not affect your plan. Your plan should be, as I said earlier, your buckets. Money you're going to need in the next 24 months or so should be liquid, low risk. Anything long term, invest in invest in stocks. And I love how Jessica gave an example. We both have the same thoughts about the NASDAQ companies. Those are the growth companies, a little riskier than the dividend paying companies. But for a young person, I see no reason not to have a little piece of the NASDAQs, tons of ETFs you can use, mutual funds, ETFs, whatever.
I absolutely agree. So 2025, we've got already a phenomenal runway that we've seen. Stocks are at a record, cryptocurrencies, Bitcoin are at record all-time highs. 2025 is going to be probably a really good year for equities.
Mhm.
So we're looking for earnings growth. The market is already telling us that S&P 500 earnings could grow 15%. Will we get that? I don't know. But the fact of the matter is that earnings are growing, and earnings growth drives share price growth. So this means, given that the Fed is probably likely to maybe cut again, we've got company earnings being supported higher. It's a great time to invest. So think about positioning, what stocks you like, what you want to buy into, set up your strategy for what you're actually going to do, write it down, set up an Excel spreadsheet, um, and become absolutely meticulous with your money, and think about taking those profits off the table once you've reached those levels, and think about buying into the pullbacks. And remember what we've said, um, be greedy when others are fearful, and fearful when others are greedy, because markets will pull back. And you might remember this, or
Mhm.
you might have heard um, an, a, a billionaire investor even saying that they typically look to buy when the chips are down. So invest like a fund manager. Um, yeah. And 2025 should be a great year.
I think that's a great way to end off. Now, as we draw this discussion to a close, we want to again encourage all of you to join the Mumu community to continue learning, connecting with other women investors like our experts today, and of course, access a wealth of resources here, crafted and created just for all of you. Now, thank you so much to Laurie Itkin and also Jessica Amir for tuning in today and joining us. Let's keep this momentum going. And once again, I'm Olivia Higgins. We'll see you next time, and happy investing, everyone.